All right, time to just address some queries. Keep them coming, and we'll try and address as many queries as possible. The idea is to really help you take the right decision. We'll use our experience. We'll use your, we'll use the guidance of our experts. I'll pour in my years and years of market understanding in terms of cycle, and then we'll try and give you the best advice. The first advice is it better to invest in a CPSE ETF or buy public sector stocks based on individual performance? Well, I think CPSE ETF, some would argue and say, is the best play when it comes to the entire basket if you're really betting on PSUs. When it comes to individual stocks, well, you really will have to do a very elaborate hard work, because not all PSUs, they go up in a synchronized manner. Not all PSUs have the same fundamental, and not all PSUs are part of the CPSE basket. The basket is derived on weightage, and if you're really betting on the PSU turnaround, I would say that basket choice is a much better idea. Let's see if Sanjiv, concurs with that. Sanjiv, for someone who's, let's say, saying I'm going to bet on a deep value product in this market, just go for the index. I mean, there's hardly any charge, jhanjat nahi hai, and you get the best everything in 20-30 stocks.
Correct. I fully agree with you. And if you can recall, I mean, last 3 years we actually advocated to buy the CPSE ETF. It was around 15.5. Today it has hit a high of 60. It has been humongous in the returns it has given. So individual stocks have already run up 2, 3, 4 times. If you buy a basket, you will have a spread of all the eggs, and that will give you much more comfort on the volatility. So I definitely advise a CPSE ETF.
The CTA, what do you mind is a good price then to buy CPSE ETF? Because the run-up has been strong. Now the point is, for someone who says, look, I was not convinced then, but I'm convinced now. Can it beat the Nifty? A simple question.
Well, glass half full, half empty. Nikunj, I am expecting now large cap stocks to do much better than the broader index. And that would mean that the index outperformance could come actually from the Nifty or the Bank Nifty. However, I think a SIP in the CPSE, or you can divide all 3 SIPs. Do Bank Bs, do Nifty Bs, and do the CPSE ETF. All 3 will spread your eggs, and you'll have, all 3 indices, which I think will be very good for an investor who has a layman and who's investing with a periodic phase. So a SIP in all the 3 ETFs would be an ideal way to ride the equity cult over the next few years.
The second query is from Rishma John. Would it be reasonable to invest in Tata Motors considering that 53% of ownership of Tata Tech is in Tata Technologies? Sanjiv?
Well, large part of that is already discounted, and that Tata Motors stock is hitting all-time highs because of some of that reason and some parts of the overall buoyancy in EVs and the whole CV cycle. However, I think that better than Tata Tech, TCS would be my top pick. And second, if you want Tata Elxsi or Tata Communication, a basket of those 3 stocks, because they have got even enough visibility, earnings capacity, and I think the 3 are market leaders in their specific areas.
And also, Sanjiv, for Tata Motors, the sum of part of Tata Tech is not even 50 rupees. It's actually 28 to 35 rupees depending on the brokerage which you track. When the issue was announced, after that the stock has already seen a run up, and ahead of listing it saw 100 rupee move. So some would say it's already pricing in the birth of Tata Technologies.
Correct. That's why I don't play the cycle now, since it is already run up a lot, and chances of you getting little hurt is more. So I would suggest the 3 large cap TCI Tata stocks on the technology front. If you wanted to play autos, then I think Ashok Leyland is giving you a better entry point at the cost of Tata Motors, given that their bus market is doing exceedingly well, and also their CV cycle, they are actually eating into the market share of Tata Motors.
So, Rishma, we've heard advice from Sanjiv in terms of auto and which are the other stocks you should own. And I'm just going to put a thought here before we wrap the show. For Tata Motors, there are 3 large businesses. One is JLR, which is about 70%, more than 70% of the total turnover comes from JLR, the global business. Then there is a truck business, and then there's enterprise value of the entire car business. The car business for Tata Motors has turned around. JLR has turned around, and the CV is something where Sanjiv feels that Ashok Leyland is a better play. So if you're really looking at Tata Tech purely, Tata Motors purely from the prism of Tata Tech, I guess a lot of good news is already in the price, because the stock has gone from 600 to 700 plus, And on the day when Tata Tech went public, the stock actually came down. So while Tata Motors, I think, still has a lot of steam left, so to speak, because of the pockets they are in. But for Tata Motors, the moving parts which will move the inertia for this company at that size would be still JLR. It would still be the EV business, and it would still be what's happening to the CV business rather than a sum of part valuation uptick which would come because of Tata Tech. So Sanjiv Bhasin, always a pleasure to have you on ET Now. Thank you for joining us.